2022 is a more complex year, so I can't assign as high a probability to it. My perspective is, in a world riddled with debt and overwhelmed by debt, if you raise prices on people, they will consume less. So my view is the opposite of everybody else's view currently. My view is that growth slows dramatically based on both the central bank balance sheet tapering and the higher prices of input costs like electricity, those kind of things, and also gasoline for cars. Those kind of things are fixed costs. And if you rise the fixed costs in people without raising wages as much, you end up with less demand. Or its potential is more borrowing. That's the only way. You either consume less or borrow more. It doesn't look like the banking system really wants to lend in that way, and household balance sheets are already, have an excessive amount of debt. So I think the balance of probabilities is a slower year, which is not what people expect. A slower year would tend to see a reduction in the rate of inflation, a reduction in bond yields, and a probable return of expansion of the central bank balance sheets. Most people see what's in front of their eyes and not what lies into the future. So you need to look at the kind of probabilistic trees of, okay, what could happen? There are no certainties. None of us know, but where did the probabilities align themselves? Most people look with inflation up now, therefore inflation, therefore wages will go up. And and therefore the Fed needs to tighten. That's the general how the market tends to think. The macro game is all about living in the future and looking backwards at the probabilities to say, what is the most likely outcome from here? And is there opportunity to invest accordingly? From what we want and what we get is always two different things.
Obviously.
The best backdrop to crypto would be further economic weakness and the marginal propensity for the balance sheets of the central banks to increase. That would be positive crypto and would certainly extend the cycle further than people imagine. And that's potentially on offer here, but it's far from a certainty. How I stumbled into this, I don't really know anything about Metcalfe's law. It was October 2020 when I noticed that when I started saying the chart of Ethereum looks like it's going to outperform Bitcoin, I got immense hatred. I was like, okay, what's this all about? And I started to try and understand, okay, how do we price Bitcoin? How do we think about it? And I stumbled across Metcalfe's law, and it made total sense. I just think of this whole space as essentially behavioral economics. What you're doing is you're creating a network of people and incentivizing them to grow the network. So I understood that, and Metcalfe's law was basically that. And then when I figured out it actually applied to Ethereum in exactly the same way, I then realized it applied to everything in this space in exactly the same way, that it was all just network effects. And that gave me something to hang my hat on, because I could then understand what was driving the market, how to think about valuation, what was a good project, what was a bad project. It was all about network effects. And I even learned to question what people think of as network effects by just stepping back and saying, okay, what drives the network? It's the number of nodes, the number of connections, Now, what happens if you have a network that's very one-sided? Well, Bitcoin's a bit of that. It's quite one-sided still. But there are protocols and there are applications being built and, Lightning Layer and other stuff. But I looked at Doge, which was this meme coin. And I thought, I don't really understand this, but millions of people own it. And my thought process was, well, what happens if somebody builds applications on it? Then you're making the network valuable, more valuable. And lo and behold, Mark Cuban saw that too and said, I'll accept it for Dallas Mavs stuff. Yeah, that's a small thing, but it was a meaningful statement that a network can come any way. It can come from amazing applications like Ethereum, or it can come from a loyal ownership base. And Elon Musk then started on the whole process. Now, I don't know whether Doge ends up building true network effects or not. But it's interesting, and I've kept my mind open to what this all means. And they have a propensity to move faster, which is why it's outperforming the internet, because you've created alignment of incentives. So with Facebook, you and I could use Facebook, WhatsApp, Instagram, and connect with our friends, grow our businesses, do all of those things. But we didn't directly participate in the network unless we own shares. But in a crypto protocol, you participate in the network too. So you're highly incentivized to grow the network or protect the network. And that makes it super fast adopting, which is why it's the fastest adoption of any technology in all recorded human history. People didn't want to believe it because they wanted to believe the narrative of Bitcoin or the narrative of Ethereum or the narrative of certain things. So people anchor themselves on particular narratives, and they don't like it to be exposed as something somewhat different. The narrative, everybody has a different narrative in the end, but the network represents all of that. So it actually started to resonate. People started to go, oh, I get it now. This is what it is. And I think I probably made Metcalfe's law mainstream for people's understanding of what this was about by sheer determination of telling people, look, this is what it is. It's not just about the uniqueness of a protocol. It's like, do other people perceive it to be unique, and can they create applications on it? Yeah, and I don't shy away from it because I'm in the prediction business, because I'm an investor. You know, you've got to have a mental framework. Now, you know, what people need to understand is asking me for a snapshot in time is not my prediction that I'm actually investing on, because what everybody forgets to do on Twitter is ask, what is your time horizon? Does it matter that it goes to 200,000 by end of year or not? No, because that's not my time horizon. My time horizon is, you know, I'm thinking of this space over the next 5 years. Where does it go? Are there markers on the way? Yes. I think that if they understand one thing, two things: the adoption of the technology, and therefore what that implies in market cap of this space, let's say by the end of the decade, that leads you to a core principle of, much like I did when I took the bet at 200 in Bitcoin, is it's probably a lot higher than here. Now, it's not certain, but the odds are pretty damn high. Unless that network effect stops, which we're not seeing any evidence of, then
contrary,
the best thing to do is just to shut your eyes. Now, if you are having sleepless nights, then your position is too big. It's as simple as that, really. Why didn't your prediction come true? Okay, so
you gave the answer in a different podcast. As in, I heard for the first time the theory that the funds will sell their Bitcoin in order to actually mark the profits for the end of the year. So that was why I was amazed, because on one hand you had the 200,000 prediction, and on the other hand you had an explanation of why that will not happen.
And that's how we should think, right? We
Correct.
need to be able to hold two alternative potential paths in our head at any one time. So I've also, you know, noted that the market has a tendency for maximum pain, which I've talked about in other podcasts. And, you know, maximum pain is, we all believe one thing, then the opposite is likely to happen. You know, and I step back and look at it and think, who is the marginal driver of this market right now? It is not retail. Why not? Well, the wallet addresses, new wallet addresses and stuff are below highs now. And I think it's to do with this consumption issue. You've raised prices on retail in terms of fuel, you know, energy, fixed costs. So their marginal ability to invest has gone down as well as to consume. So you've taken marginal money out of the market. So if you've taken them out a bit, and then the institutions are at the year end and they're incentivized differently. It's actually not all in Ethereum. It's about 80% Ethereum. There's 95% in crypto, because I've also got a position in carbon. which is the only other non-crypto trade I've got. But the other layer ones, it's really simple to me. I don't know why everybody gets in a big mess about this. It's really simple. Okay, so Bitcoin is the least flexible in its current format. So if you want flexibility of smart contracts and ease of use, you go to Ethereum. That's great. Now, if you want cheaper fees or faster, you go to another layer one, Solana, Terra, Avalanche, etc. And they all have their place in the ecosystem. And that's fine. And it's not, I don't think the market is all about price or speed. It's all about network effects. Those chains are getting network effects. And I think Ethereum's dominance of the alternatives market, the non-Bitcoin market, will fall over time. Because the market's going to broaden out and find different use cases. It's like I was having an argument on Twitter last night about decentralization. But it's not decentralized enough for them. Nothing is compared to Bitcoin. But people will take trade-offs. Everybody does. Life is about a trade-off. And the trade-off is less decentralized equals faster and cheaper.